Daily bias is very likely one of the most important concepts for anyone to master in trading. There is no trader out there that cannot pick the direction correctly that is a profitable trader. If you want to become profitable, you need to master the direction of the market. And that is where daily bias comes in. And in this video, not only are we going to break down daily bias, very simple. This is going to be a full guide on ICT daily bias, but also I will leave you with an exercise that is going to completely change your trading forever. So let's go onto the charts and let me show you how to master ICT daily bias in the most simple way. Now, let's start off with why daily bias is crucial. Daily bias is the most important concept for our trading because of a very simple reason. Profitable trading is simply about having the right direction and the right execution. A lot of people focus on having the right direction, but that is not what trading is about. Trading is mostly about the right direction. If you're able to master the direction, the probability of you being profitable in the long term are very high. So profitable trading equals right direction plus right execution. And in the first part, we have to master the direction of the market, and that's where daily bias comes in. Daily bias helps you predict where the next daily candle is going to go. Is it going to go up? Is it going to go down? Is it going to go nowhere? That's what we are then trading, because if your belief is that the market is going to go up today, you shouldn't be taking any shorts. And if you believe that the market is going to go down today, then you shouldn't be taking any longs. And if you don't think that the market is going to go anywhere today because we've just hit a big target, a big liquidity point, then you shouldn't even be trading. So we just have to ask the right questions. Now, let me ask you a very simple question. This is on NASDAQ. And if I ask you, is the market going to go up 3.8% or down 3.8%? These are the same amount. I just want to ask you, is the market going to go towards these lows or is the market going to go to these highs? That is the question. Now, some of you said bullish. Some of you said bearish. Both are wrong. Well, it's actually not you that is wrong. It's the question that is wrong. Because as I've said previously, we have to ask the right questions. And if you are asking the wrong questions, you are going to get the wrong answers. Just like both of these answers were wrong. They were wrong because the question itself was wrong. Now, as traders, especially as day traders, our job is to be right on where the market is going to go today, and not where the market will be going in the next month. Because when we're talking about a 4% move to the upside or to the downside, understand that it's very likely not going to happen in one specific day, right? So forecasting a 3, 4, 5% move is not beneficial to you because you won't be executing on that move. You don't execute based on what the market is going to do in the next month. You have to start by executing on your expectation of where the market is going to go today. And that's why the question was wrong, because I was asking you, is the market going to go down $800 or up $800, right? The question was wrong. But if I ask you, where are we going here? Then you already can see, okay, we have liquidity that was swept. We have the market starting to break to the downside. This shifts bearish. So yeah, the target is going to be this external liquidity. And on the next day, we hit that target. Now, when I'm asking you where the market is going to go today, you can give me the right answer. So you ask the right questions and you'll get the right answers. Basically saying, once again, that if you are asking the wrong questions, it does not matter what the answer is. It's going to be wrong because the question was wrong. And that's why so many traders fail when it comes to daily bias, fail when it comes to ICT, fail when it comes to any sort of trading, because they're asking the wrong questions. So how can we ask the right questions? The right questions. Finding the daily bias is as simple as asking two questions. Where are we? And where will we go next? But, and I know that this is vague, but let's dig deeper into it. So where are we? Where are we in the market is dependent on market structure, which I've made a full video about, which is going to be in the description. But it's about understanding the daily market structure. Are we bullish or are we bearish? So in this case, you can see that the market is moving down, moving up, boom. And then we have this market shift. That's why I marked out this order block, because once we shift this, you already know, okay, we are bearish on the day, even if it is short term. So I expect tomorrow to be bearish. Where are we is about finding out what market structure the most recent daily candles are following. So once again, you can see that we had the sweep of the high and we had this very big bearish candle, and that is resulting in bearish market structure. Then we pair it with the next question, which is where will we go next? Where will we go next is answered by understanding what is the closest liquidity that we can target. The market moves from pockets of liquidity to pockets of liquidity, following market structure. That's why in the example shown previously, you would mark out the closest area of liquidity that you can target, because now you know the market is bearish. Therefore, what is the nearest level of liquidity that I can target for today? So once again, we had the external range liquidity that we got taken out. Then the market starts moving to the downside. We have the bearish market shift. And then we have this closest area of liquidity that would be your target. And that is exactly what we hit. So you can see that the market structure is currently bearish and the closest area of liquidity we can target is the low. Therefore, our daily bias is bearish. Let's see some more examples. So on this one, and I'm showing you this on every single market, you will notice I will tell you the market that I'm showing this on. And you'll notice that this is applicable in every single market. So what is the daily bias right here? This is on Bitcoin. What is the daily bias right here? You can see we swept the highs, we started to move bearish, we move higher, we move back to bearish. Okay, we have a very big bearish close. So very big bearish close. So the next area of liquidity is going to be this low. So our bias is bearish. Our daily bias is going to be bearish. And that's what we target. Now, what is the daily bias? This is on gold, and it's going to be a little bit more complex, but what is the daily bias? Right here. A lot of people would say, okay, it's bearish because we've just swept the high, but you're missing the crucial point, which is that the market structure is still bullish. So you can see market structure is still bullish. The next area of liquidity we have is the previous day high. We have a fair value gap and we have a previous day high. A lot of people here fail because they try to call for this short, not understanding where are we? We are in bullish market structure. So therefore, your target continues to be the high until we have a bearish market structure shift. So you can see that that is what we target. We came down, followed by the sweep of the previous day high. Now on euro dollar, on FX, what is the daily bias? So we have move lower, move lower, move lower, moves higher, move lower. And now notice we have a market shift right there, followed by liquidity and liquidity that we can target. And that is what we targeted. We came beautifully to the order block and then we targeted the liquidity. Now on NASDAQ, once again, what is the daily bias? So what is the market structure? The market structure is bearish. So you can see we had the bearish market structure, and now you would ask yourself, what is the next closest area of liquidity that we can target? And then we see very clearly the low right there. And that's where we have the target. And I know what so many people are going to say, it's that these ones were obvious. This is the question. Were they? Because retail traders don't think so. Because let me show you that every time the market is moving down, all of the retailers are always longing, right? And then when the market moves up, all of the retailers are shorting, right? The market is moving up, retailers are shorting. The market is moving up, retailers are shorting, right? The market is moving down, retailers are longing. So can you see that maybe these are not that obvious, right? And even if it is, let's say that it is. Do you seriously get happier if you can call hard markets and hard biases, or if you put money in your bank account through your trading? Because so many people are more focused on having this reversal call that they can talk to everyone about than being right. You need to get your ego aside. Your focus should not be about, oh, I called this bias and it was so hard. No. Your focus should be, I think the market is very clearly bearish and I'm going to continue executing short. This right here is the exact same chart. And you can see as the market is moving up, right here, retailers are positioning themselves long. Every time the market is moving up, they're positioning themselves short. Every time the market is moving up, they're positioning themselves short. The market starts to move lower and they start positioning themselves long. And I'm like, if it's that obvious, if the daily bias is that obvious, then why are all of these retailers wrong? I don't want you to be part of this retail mind. So that's why I'm showing you this. You are supposed to trade easy. Why would you want to make life harder for yourself? That is really what I would tell you. Now, a word of caution. A lot of people find themselves frustrated because they can't seem to find the daily bias. If the daily bias is not obvious, then likely it's not a high probability scenario to trade either way. And let's say that one day is very clear, the market is moving bullish. If you are wrong, then it's also fine. Everyone is wrong with their daily bias at some point. For me, usually I'm wrong 30% of the time. That still means that I'm right 70% of the times. And if I'm wrong, it's fine. Your goal is to reduce the amount of times that you execute when you are wrong with your daily bias and increase the amount of times that you execute when you are right about your daily bias. Now, the way you do this is by then reading the price action that is happening on a specific day, reading market structure, reading order flow, many things. If you want, I can make a full video about it, but it's about understanding that even if you are wrong, let's say that you are wrong and you take a loss, and every time you are right, you take a win. That's still a 70% win rate. That is absolutely amazing. So daily bias is one of the most important things to focus on by asking yourself two questions. Where are we and where will we go next? And how to be right most of the time, because I know that this is probably one of the reasons why you clicked on this video. The way to be right most of the time is by focusing on the days where the daily bias is most clear. If it's not clear, you don't trade it. The reason I'm able to have a 70-30 split on being right or wrong is because I'm selective on the days where I say we are bullish, and I'm selective on the day that I say we are bearish. And by being selective and not having to be right most of the time and being okay with being wrong sometimes, this is how you are going to change your trading forever. And a lot of people haven't gotten this far into the video because it's an extensive video with a lot of information. And I want to congratulate you if that is you, that you're not just another dopamine-filled trader that just wants to watch this next daily bias video. No, it's understanding this video deeply. Watch it 1-2 times. These are videos that people charge for in their mentorship. Right? And this is the type of video that I have inside of my mentorships, and that has absolutely changed the way that they see the markets. We've gotten dozens of traders funded, right? Daily bias has completely changed the way that they trade, right? If you want more educational content and results like this, where people are calling the bias, they're getting funded, they're moving into live accounts, they are one trade away of passing favorites one, and they've never been in more than 2% profit in the last 2 years, past 5 top step combines, total profit 3.7R, getting funded, getting a first payout, then join us at Funded Trading Blueprint. We have the track record of getting so many traders funded, and I would love to see you being one of them. Hope you enjoyed this video. Click right here to watch the full guide on getting funded this year. And if you're looking for a reputable firm to get funded with, then Funded Next is the way to go. Click right here and use code Kimmel for 120% refund. And if you're struggling with overtrading, you already know Trade Blocker is the way to go.